Is real estate still the best investment? Today, we're going to dive into this topic. I'm Dr. Christopher Liu. Thanks so much for coming back to the Financial Freedom Podcast YouTube channel, where we explore smart ways to manage your finances and make better investment decisions. If you're new here, don't forget to subscribe, hit the bell icon so you never miss our weekly updates. Today, we're diving into the big question. Should you buy a house as a strategy for building wealth? We're going to break it down. The answer is yes and no. The first part is introduction to homeownership and wealth. Owning a home has traditionally been seen as a rite of passage to financial stability. Most of the wealthy people, the rich people that I know, all own their home and have used real estate as a component to their path towards financial stability. It's changing these days because with today's economic shifts, such as inflation, high mortgage rates, lower nominal income, and harder to get into the real estate market, the real question is, does buying a house really equate to wealth creation? So let's look at the historical perspective. Historically, real estate has appreciated in value, giving the impression that buying a house is a foolproof investment. But let's look at the facts. Look at 2008. While many homeowners got caught and got underwater. While there are ups, there can also be significant downs. It's not as straightforward as it seems. The economic reality today is that owning a home is extremely expensive. Insurance costs are rising. Climate change, fires, hurricanes, tornadoes. You have tenants having more rights than the owner. Property taxes are rising. So the cost of houses has risen dramatically compared to income growth. What does this mean for the average buyer? It means they're getting priced out. They're not able to get in. It means longer mortgage terms, a higher total cost over time, potentially straining personal finances. Add to that, a house is illiquid, so it's a lot harder to get in and get out of very quickly if you need to today. Which brings us to understanding real estate as a lifestyle asset versus an investment. A home is often seen as an asset. Technically, it is because it appreciates in value, but it's what we call a lifestyle asset. It's something that enhances your life, but doesn't necessarily generate income the way that other investments might. So let's break it down even further. I know a lot of my doctor friends, they rent their homes, they buy large multifamily apartments, they invest in real estate. They don't own their own home, which reinforces the idea of the home as a lifestyle asset. Over time, that home appreciates. But again, for example, a lot of my real estate investments, they're aging, they break down, issues with the plumbing, issues with the water, issues with fire, issues with hurricane. And over time, this emotional toil takes its toll. So it's not always the case. The other thing is, look at the cost of home ownership. Beyond the purchase price, home ownership comes with maintenance, taxes, insurance. All these expenses add up and don't contribute directly to wealth accumulation. It's usually the opposite. And if you take a look at a lot of my homes, usually the expenses are 50% of my net profits. Is it really worth the mom and pop owning single family real estate where you have hedge funds or private equity or builders or high net worth individuals, the billionaires buying up $150 million homes and letting those appreciate and sell? So you have to think about what are the hidden costs of ownership. It is a great quote that I recently ran into is that if the rich usually start and buy businesses, they accumulate their wealth and they put it into equities and real estate. So the single family mom and pop landlord type, you're not going to make much money, and it can be a slow way to store and invest your way to wealth. But if you want to make the big money, you have to either go into commercial development, private equity, syndications, these types of things where you have scale. Just look at the example of the company Airbnb, which lists probably millions of homes on its website, and it doesn't own any homes at all, and it's worth billions of dollars in value. So that's how you achieve this level of scale. So if you're looking to make big money, you have to start thinking a little bit differently. Look at renting versus buying. Let's not overlook renting as an option. A lot of millennials and Gen Z, they're sick and tired of this kind of old mantra of work hard, the industrial age ideas, and they're looking just to have a good quality of life. And homeownership may not be that. They want to be more mobile. They want to have their freedom. They want to build businesses. They don't want to be tied down. So renting can offer flexibility and the freedom to invest your money in higher yield opportunities. All that time spent in handling rental real estate could be spent building a business, investing, networking, creating opportunities, collaborations. It's not throwing the money away if it frees up your finances and your time to grow elsewhere. Let's look at the psychological impact of owning a home. Owning a home does not have psychological benefits. It has a sense of security, stability. However, these benefits can be achieved by renting a great place without the long-term financial commitment. Me personally, I own my own home, but I don't, I own it as a way just to have a place of my own that I can call home and that I can feel more comfortable owning. But that's not the case for some people prefer to rent, which gets us into the next idea is investment alternatives to buying a home. So for millennials and Gen Z really looking to build wealth, diversifying your investments is key. The first key is to develop a skill set that you are the best at and to create a business around it. The rich always start and buy and invest in businesses. They put their wealth in their money into equities and real estate. But here's if the different investment strategies might offer better returns than sinking all of your capital into real estate. So in closing, buying a home can be the right choice for many. Usually it was a ticket to the American dream, but it's not a one-size-fits-all strategy. These days, there's other ways to make significant amounts of money without tying up your capital or your time and without the physical hassles of owning real estate. So consider your personal financial goals, market conditions, and other investment opportunities before taking the plunge. So I hope that helps dispel the myth. I'm not saying that real estate is a good or a bad. It's an investment class, and you use it according to your own goals and objectives. So thanks for watching, everyone. If you found this video helpful, please share, comment, subscribe with your thoughts. It helps with the algorithm, helps the channel grow. It helps us develop the ability to create better and more engaging educational content for you. And so what do you think? Do you think buying a home is a good investment? Let us know below. Until next time, we'll see you in the next video.